Hope everybody is doing well. We'll be starting. Ooh, it's live stream too. We'll be getting started in about 3 minutes. I'm just here answering questions. Spotted. So no settings up nicely. Range out. I'm attempting to close the gap. I'm just not even going to say anything. Scott, there we go, Matt. Something for you to do. Hello, Zoom user. Few more minutes. So to just while we're getting started, let me get my, I know you guys like bar charts, so I'll use bar chart. Let's go chart. I know you guys like bar chart, so I'll use bar chart. Just one, your green screen needs the color green. Yeah, it's not green today. No green today. Let me share this with you.
You gotta fix your camera too.
My what?
Your camera. I'm gonna come over there in 1 second.
Okay. Hey, good. Thank you. Good. Got more stuff to copy there. Steven, how are you? Scott, how are you? Time to quit day trading, 1 loser and 20 plus winners. Listen, what are you going to do? That's actually what I was going to talk about. Thanks for reminding me. Actually, to correct you, Scott, if you look at the 120 something trades we took in the other trade room, this is actually funny. This is a funny conversation. Nice, Matt. You're missing out on all the good stuff, but you're doing something. You're doing God's work, Matt. Oh, I know you will. Hey, let me show you guys something. You know, I get so excited when I come into this room. Screen number 6. I feel like a kid in a candy store with all of you. I love it. You guys really help me and energize me. That's why I love helping you make money more than anything else in this. Well, not anything else, but most things in this world. So if you guys remember, somebody said you had over 20 trades and 1 loser. Time to give up day trading. I know you were joking around and playing around, but actually, let me just say something interesting. When we did the 120 whatever trades in the other room, the public room, the non-VIP trade room, we were stuck in 2 stocks. One of those stocks was Etsy. Excuse me. We were stuck. We got in around $70. And we got out today at about 71, 72, somewhere above there. The other stock we got stuck in was in was it Nvidia? I think it was Tesla. Ooh, look at that. Good. I'm glad to hear that. Make sure you copy that, man. All that stuff. Then the one underlying down, it's still showing loss. How does it work? We're down, Anita. I'm going to talk about that in a minute, actually. Can I get the same settings on TOS as you have on bar chart? Yeah, I mean, it's just a volume. Folks, this is really easy. 50-day moving average, 100-day, 200. This is the little 8 EMA right here. And that's just the volume with a 50-day average volume on top. That's all it is. Terry, if you want, just send me an email and I'll write it out for you, or you can take a screenshot. But look, studies, I have the 50, the 200, the 8-day EMA, the 100, and the master volume at 50. Take a screenshot and just replicate them, okay? All right. So getting back to today, if you guys remember, you may or may not remember, we got taken on Tesla right here, right there, and it went against us, and then it went right back down. We got out right here, and on Etsy, Jeff, that's something you should ask customer. It's a great question, but I don't know the answer. You should ask customer service the answer to that question. That would be my recommendation. That would be my biggest recommendation. So, oh, Etsy, wrong ticker. Yeah, wrong ticker. Thank you. And then Etsy took us for a ride right here. Do you guys remember that? Alexander, where are you? You've been asking about this Etsy trade for like a month and a half. Finally, when I'm telling you what happened, you don't want to. Where are you? You're always here. All right, let's see if Alexander's here, because he was concerned about that Etsy trade. So I wanted to make sure we're on top of it. So we got in right here, and we're getting in here now. So we finally took an official loser today. Yes, we actually took a loser today. Let me show you why I took a loser today. I took a loser in this stock. There's, you know, losers are really great because you can learn from them. Hey, Cyrus, and hey, Ken. So why did I get out of this trade? Well, it went above my area right here, right? Good, George. Good. Remember I told you if it goes above this area, it won't look like it's going down anymore. Right? Now it looks like it's going up. I got out of it. Now, would I have gotten into this stock to the short side? Absolutely no, I would not. I never recommended EXAS, Mark. I not in the last month and a half or 2 months. I don't know. Are you talking about just something you picked, or what are we talking about here? That wasn't the stock I gave you in the day trading room in the last 2 weeks. Tell me, maybe I could help you out with it, but I don't necessarily know what you're talking about. Okay, so only day trading room. That's all we're talking about here, folks. Oh, looks like Shopify's getting a little bid. Dollar General is not getting any bid yet. Nothing. No soup for Dollar General just yet, but we'll keep holding on to it. So I negated this stock. I was short this stock. I wanted to have a stock short because the market was, well, you could see what happened. We got into this stock right here. See that? See that right there? It looked great. It looked good. It looked like it could still go down. Mark, I'm talking about stocks that I've given you guys as actionable trades and said, get in, get out, get in, get out. That's what I'm talking about. Okay. I am 99.9% confident if you've been listening to me, you will have losers, a lot of losers. It's how it works. Right. Okay. So here I still liked the stock. I liked the stock. There's a reason why I'm talking about this. So I liked it. It was below the 8-day EMA. I might have actually gotten into stock here. I don't know. But it went against us. I think we got in like right here, and it went against us. Then it had an inside day, so it looked okay. And it actually broke the low by 10 cents. So I stayed in it. Still at this point, you could say, yeah, this stock looks like it's going down. Then we had a big day yesterday right here. And I told you guys that I'm really worried about the stock. And if it goes a little higher, I'm going to get out of this stock. Because it doesn't. Can you close the door, Matt, please? They're having a party out there. Oh. Right. And then today, I looked at it in the morning, and in the morning, it had really good relative strength. It didn't look like DG looks right now. Don't even get me started. That's a stock we got in this morning. Oh, thank you, Adam. Make sure you get that too. So the point being is I'm not seeing I didn't see any major weakness today. And I asked myself, can you defend this stock? Can you defend this position as a short? And I said to myself, if somebody showed me this as a short, I would laugh at myself and say, I'm an ass clown. So I'm going to get out of the trade. Being honest with you, right? Now, with that said, we're also short LTHM. Exactly, Mark. That's where I'm getting to the other one. Exactly. That's right. Listen, I try. I could try, right? Okay. So now we have LTHM. Another stock. Now it's above the 8-day EMA. I'm getting worried now, but let's look at what the stock is doing. If I was a trader right now, would I say the stock is not a short? I would say the stock is a perfect short. Matter of fact, I would be buying the stock about right now. It failed a tail gap to the upside. It's in a downtrend, and it doesn't seem to be holding on to the gains today at all. So I'm still in love with this stock. Now, obviously, I'll jinx myself 100 times in the next couple of months, but no doubling down. No doubling down. I don't play that game. I never have. Robinson, I'm going to explain something to you. Nice. Look at that. Good, Bob. So I'm going to teach you guys the most important lesson you're going to learn today. I want you to write down what I'm about to teach you. And anybody who knows anything about statistics or math will tell you that what I'm about to tell you is 100% true, but you've never thought about it yourself. So I'm going to tell you something right now. The highest probability trade that you have, the highest probability trade you have is the one that just turned into a profit from breaking even. That's your highest probability trade. Where your entry's right here and it just went like that. That is the highest probability moment you will have in any trade. Anything away from that, your probability, your edge starts to decline. Okay? So think about it. We got into this trade right here, or right there, right here, right here. This does not give me an edge. Now, if it comes down here, I will have an edge. But right here, I don't have an edge. The trade still doesn't look bad. I can defend it. There would be no reason for me to get out of a trade because it still looks great. Matter of fact, what I would want to see is I would want to see it go above these levels. Today, we're going to start talking about not just giving you trades, but I'm going to talk about giving you potential exit levels. Okay. Yeah, probably. But nonetheless, I'm right here. It already made it made a lower high. I don't think it's going to go back up here today. Yeah, I'll repeat it again, and you should write it down, John. The highest probability, the highest edge you will ever have is the moment after the trade goes in your direction. The highest probability, the biggest edge you will have is when your trade goes immediately in your direction. Unfortunately, the majority of folks think about putting an exit when it happens, but instead of averaging up. But that's the time you want to average up. Okay. And anybody here who understands anything in statistics will say, yes, he's 100% right. It's not a theory. It's not an opinion. It's a mathematical fact. I love facts. And anything else count as well? No, Robinson. I'm talking about you obviously got into the trade because it had all those things. But your highest edge in the trade, not your highest potential profit, your highest edge is right when the trade turns into your, that's your highest edge that you will have when you're validated. That's your biggest edge. Okay. I know I've said it like 5 times, but there's a reason why I've said it 5 times. So this trade to me, I can defend. I could stand here in front of 200 and something people, or I don't even know how many people are in here. Let's see. Where are we? Here we are. We got 307 people. I could, with that edge, what am I to take from that? That when a trade starts going your way is when you want to start thinking about averaging more money into it. Not when it's against you. When it's your biggest edge to average up a trade is when it starts going in your direction. So let's say we're long, hypothetically, wink, wink. Let's just say we're long Shopify. And let's just hypothetically say that we're long Shopify from 68.12. Hypothetically, of course. Wink, wink. And Shopify, let's see, where's 12? Where's 68? Where's 68.12? Somewhere like right here, right there, or like right here somewhere. Okay. And right now it's just doing nothing. Anita, your highest probability of making money is when it goes. So when Shopify comes up right here, that would be my biggest validation point that I'm right on this trade, and that would be your most optimal time to average up on the trade. Not when it's, so what you should be thinking is, ooh, it's against me. I should lower my exposure. Oh, it's going for me. I should add a little bit more to it. So there's a lesson here for you. Okay. So, and by the way, we're not hypothetically, we're long Shopify and another stock right now in the day trading room. There's nothing hypothetical about that. And we're short LTHM. But it went down after. Anita, I'm sorry. I don't know what you're talking about. Somebody asked me about Dollar General, the other stock. I didn't want to say it because I'm giving away trades. So look at volume right here and look at volume since it's been drifting. Nothing. Let's wait for volume to pick up. The stock is up almost 3% for the day. So I'm still holding this stock. Remember, I entered these trades with the daily time period in mind, which means I'm going to use the daily to exit the chart. These little swings don't bother me. If the daily chart gets messed up, then it's a whole different story. Yes. Yes. As you know, I'm pretty vocal about my exits and the entries. I keep you guys updated on everything. I'm like a walking diary for, with all of this stuff. Transparent. I'm very transparent. Okay. So today, what happened? So I wanted you to see that first of all. Now let's talk a little bit about the market and let's kind of figure out where we're at right now. Okay. So the SPY is up less than 1%. This does not look great right now. I would imagine if I was a fund guy, I would imagine that a lot of folks are taking profits from this move. And I also said it's kind of hard to have two gap days. So the fact that we're coming off a little bit is not surprising by any stretch of the imagination. The question is going to be, how low are we going to go? We made a higher high? That's great. We can close near the high towards the end of the day and rally from there. The odds are, remember, we're still in that seasonality. We're still in that bull phase till New Year's. Can't deny it. So more likely than not, what we will see here is going to be very similar to what we're seeing right here, or right here, where it's not going to take away everything, but it's going to consolidate. Now, the bond market, I'm not going to get into fundamentals because I don't want to bore you. I know you guys want actionable hot red meat. I want to talk about fundamentals, but I know nobody else does. Yesterday in the Telegram channel, I told you that the bond market, if the bond market's going to go up, break out from here, stocks are going to go up. If we break down, stocks are going to go down. Well, we didn't necessarily break down from this level, not break into this. This was expected. So the question is, are we going to break up? Excuse me. Are we going to break up or are we going to break down? All right. And unfortunately, we don't know yet, but right now, my probability is to the upside by about 65%. So very briefly, very, very briefly. Very, very briefly. Year over year, they got 1.3. X food and energy, they got smaller number. X food and energy year over year, they got smaller number. But here, X food, energy, and trade services, they got a higher number. So that means things that were causing inflation are not causing as much inflation, but other things are. And that's a problem. Okay. That is a problem. So it wasn't that bad, but it wasn't that great. Retail sales today, look at this, -1, positive. They were looking at negative here. They got positive. X vehicles and gas, they were expecting more. So there are other factors that are impacting right now our economy. But fundamentals were pretty solid, and market is still hung over from yesterday. Here's another chart. You could see this screen right here. Notice this is LTHM right now. This is the daily chart. Matt, would you be a buyer of this stock right here, or a seller?
A seller.
Look at that lower high right here, below all the averages, straight up and then straight down. If it fills the gap, it'll probably come right down right here, and then we'll see if we want to add to it when it comes down here. But I right now I really like this stock, and also it's good to be hedged since we have Shopify and Dollar General, and Shopify is actually holding up much better than Dollar General. Dollar General's not. We'll see how it's doing tonight, and if I still like the technical. Now let's talk. So we're bullish. We want to look to the bull side. We don't want to look to Dollar General, DG Gary. We don't want to look to the short side because the short side, there's just well, here's why we don't want to look to the short side. There's a fundamental reason for it. We're above the 8-day moving average, we're above the 100-day, we're above the 50-day, and we're above the 200-day. And volume is confirming this move. So I don't see any reason at all, uh, why we wouldn't want to look at bears right now. I mean, it's nice to have a bear for if like overnight, like we do right now, while we have two longs, that's okay. But I don't think we need to focus on the bear side. We need to focus on what the institutional traders are doing right now. And the institutional traders are clearly buying this market up like there's no tomorrow. Okay. With that said, you guys should be able to see my bar chart screen here. Cyrus said Target is up 17% today. It is surprising. Why is it surprising? They had earnings. Remember, I always tell you guys, don't trade through earnings. You're foolish. You're gambling if you're trading at earnings. You go to Las Vegas, you get better odds at trading with earnings. My opinion, but I mean, look, here's the problem I have with trading earnings. You don't know what to expect. So if you don't know what to expect, how do you put yourself in a position of strength or weakness? Because what if you make 10% and you lose 20%? You don't have any so what ends up happening is folks end up taking those trades with very, very small trade size because they're afraid for good reasons. It's a lottery. So it's betting on a coin flip. So when you do that, and a lot of folks do, and it's fun. I get it. There's nothing wrong with that. But it's a lottery. So what happens is you can't commit real like a big piece of your money to it. And if you can't compete, if you can't put a big piece of your money to it, then it really isn't trading. Because the point of trading is to grow your account predictably, consistently over time. Again, call me crazy, but I'm telling you what I think, right? Again, nothing wrong. Look, hey, let's buy $300 worth of Target calls. They have earnings tomorrow. That's great. Again, but we have to make this trade. We have to do this ATR adjustment. This is going to we need to know what our dollar value is. That stuff will mess you up. That stuff will really mess you up because it's very, very hard to know what you're going to get. You know, again, my 5 cents. All right, so my beautiful list. Okay. So let's talk about stocks that I like, and let's talk about potential stop loss levels, okay? Because we never do that. And today we're going to do that. We're going to talk about stop loss levels. Okay. Very easy. So I like this. Where would I put my stop? Let's see. Can anybody tell me where would you put your stop? Let's play. Where would you put your stop? Where would this trade be invalidated? Right. Right here. Somewhere right over here. Maybe not all the way here, but somewhere right here into the gap. Not top of the gap, a little lower. You know why? Because institutions they love to squeeze the gap and then pop it back up. So somebody said 158. Let's see. Maybe 180. No, maybe no, Bob, not 150. No. If this trade was to come down to about 158, 158.48 around there, I would probably get out. Or if it starts coming back into this range, 157.67 at the worst. Now this is too much. And then by that time, the 8-day EMA would be right here. It would probably cross it. I'd probably get out of it. So probably around 157, between 157 and 158. Next, Starbucks. Let's look at Starbucks. All right, where would this trade be invalidated? Actually, wait a minute. I forgot to give you the option for it. Forgot to give you the option for it. 159 right here. Right there. Okay. Let's go back to Starbucks. All right. Where would this trade be invalidated? Just give me a dollar level, guys. Come on. This is good for you. This is good for you. Someone said 99. 99. All the way down here? No, no, that's too much. Too much. I would say right here. Remember, we want to buy it because it's moving up. So around right here, right there. Now about 101.60, right there. Right there. And by the way, Matt, do you agree? If it comes down and breaks this level, this trade would be invalidated? Okay. I don't know where that is, but yeah, somewhere a little below 102. Yeah, right there, Gary, around there. Let's give you guys the options for it. Is this helpful? Does doing this help? All right. Today we're doing stop losses. We're not doing profit targets. 9 days out, about 103 level. 103. 103. Let's see. All right. One second, guys. Gotta check. Okay. I apologize. Yeah, I'm just showing you. I'm showing you levels where the trade would be negated. Negated. Okay. So on Starbucks, the option we would pick would be, what did I say? 24th. About 104 right here. All right, let's move on. I'm not going to look at it. Okay, guys, do me a favor. Like, Dave, stop posting things that I should look at. I'm not going to look at anything that you want me to look at. Doesn't work that way. This is not a democracy. IBM, where would this trade be invalidated? Give me a number. 149, 148. All right, everybody says 149. I would say right here, right there, 148.55. You guys are pretty close. Right below the 8-day EMA, and I'd want to see it close there. Right there. I want to see it break this gap right here. Now, hopefully, this is giving you some more guidance and directional bias. You guys are rascals. You got to watch you like a hawk. 9 days out. Right here, 150 strike price. This makes the room a little more interactive, too, I think. People get in on it, on these levels. They like it. Pay more attention. Oh, have I ever talked about this stock before? Let me ask you guys, how many times in the last, how many times have I talked about this stock? Like every other day? Seriously. Right, almost daily. I don't really love the stock at all. It just keeps showing up on my radar as a stock to buy. It's always recorded. We record everything we do here, except me going to the restroom. Everything else is recorded. All right, where would you get out of this stock? 65. I would go right here, 63.75 under this little squirrely line. And if you're day trading, a lot of prop traders put their stops right under these little things. Remember that, Matt? We were talking about that? Right there. Right there. That would be an invalidated trade. 63.47. You're way too tight. Way too tight. Who was it? Right here. Right here. You got to give these rooms. Look, It comes back down and it comes back up. You got to give them a little room. Got to give them room to breathe. If you don't give them room, nothing good's going to happen. You're lowering your edge by not giving yourself room. But again, the stock looks fantastic. Let's talk options here. How about the 60? Yeah, you can do the 68. There's no implied on this. Right here. Right here. I have no idea. Oh, what is relative strength? I don't know. I imagine it's great. I mean, look at the chart. I mean, do you really need a relative strength guide for this one? I mean, holy moly, look at this thing. We literally talk about it every other day. That's right, Greg. Remember I tell you guys you're trading way too big size? You're trading way too big size. Too big. It's just funny how we keep talking about, Roger, what stock should I buy? What stock should I buy? That darn EDU has been coming on my radar for 3 months almost every other day. Oh, Matt, there's something, they posted something for you privately. Make sure you see that, okay? And remind me of it. Thank you. Because I'm blinder, because I forget these things. Let's see. Let us see here. Next one. Oh yeah, no, we're Netflix. Yes, Netflix. It's very interesting. I'm day trading 3 different assets. I'm looking at questions and I'm teaching at the same time. I don't know how I do it myself sometimes. Share, if you have to ask that question, my answer is 1 share. 1 share. How many times have I said it, guys? 1 share. Till you become a pro trader, 1 share. Didn't I give you guys I gave you a trade on EDU, I believe. Netflix. Why do I like Netflix? Right here. Look at that. Look at that breakout. Right there. If you have to ask how big, 1 share. You know, here's the problem. Here's the problem. Let's say that you were going to be, somebody calls you tomorrow and says, I want you to be a driver in the Indy 500. Okay. How long do you think you'd have to prepare for that one? Let me ask you a better question. You're trading against guys like me. Okay. Do you think you could trade against me profitably? Do you think it takes more time? Do you think you should be trading with a large size till you feel comfortable about doing it? Think about what you're saying here. I'm trying to be realistic with you. Remember, you're going against guys like me, like Matt. You're going against sharks. Why would you ever put yourself in that position unless you were fully prepared or trading with 1 share till you get started? Nobody listens to me. Yeah, you're trading against guys like me. What makes you assume that you can beat somebody like me? If you put me and you next to each other for 2 weeks, do you think you're going to beat me in trading? And again, I'm just explaining to you, you have to trade real small. How big? Small till you're really good at it. That's how big. Real small and then normal size. And it's worth it. Because if you could do this successfully, you could leverage yourselves and you could trade, and you will never have to worry about trading a small account. Because if you could trade profitably, you will have no limit to the number of people who will be giving you money to trade, that you will be saying, I don't want this. No, thank you. Trust me on this one. I've never seen a profitable trader have a problem finding money to trade. You know that? I've never seen it in my life. All right. So let's continue. Netflix, where would we put a stop loss here? I would put a stop on Netflix below this bar right here. And Netflix is a beast. It's a beast. 436-ish level around there, 435. Probably, if it comes down here, it could still rally. Remember, this is a volatile beast. You want to give it a little more, all the way up, all the way down to here, 34. You got to give it a little room. Now, you're probably saying, shit, you want me to buy Netflix and you want me to hold it up all the way down here? That's 30 points. Yeah, it is. Well, the stock moves, let's see, 12 points in a day. That's 3 days. Got to trade small. Exactly. I was just thinking, Matt, like the Tesla trade. No, I think Netflix is just getting. Who said that? Cyrus? Cyrus, see what you're doing. That's Cyrus. I'm going to tell you something right now. That's a trading psychological issue. Why would you say it's done? This chart, if somebody showed me this chart, I would get in every day and twice on Sunday. It's above the 200, the 100, the 100, the 50, the 8-day EMA. It broke out previous levels. What is there not to buy? What is there? What is there not to love? Okay, well, hold on. The next, we went into the gap. We don't have anything here till all the way up there. Why would you not want the stock? Why would you not want this stock? So if I was to pick stocks, this would be, look at how it's tailoring the 8, not choppy, pretty consistent. Volume's not there, I'll give it that, but it's a huge cap stock. So I like this stock a lot. Let's continue. One of the biggest ways to ruin yourself is to start thinking tops and bottoms. It's moving up, that's it. You don't know how long it's going to go for. Don't limit yourself. That's a mental thing. That's a limitation. And I don't mean like you're mentally ill. I mean like trading psychology stuff. $450 right here. $450. Yeah, I mean, all right. Timing? You mean you mean the pro trader dashboard doesn't give you tell you when to get in and out, Eddie? I'm giving you everything else. You already got that. You got the timing tool. You got a really good timing tool too. Okay. I've been getting emails all day long from people who've been making money with it. Next one, Allstate. All right, I'm going to speed up a little bit. I don't want to take the rest of your day away. Looks like it's coming back above the 8-day EMA. Your stop would be right here. Nice and easy. Right there. Right there. Somewhere right there. That would negate it pretty good. Roger at rogerscott.com, Jeff. And in this case, don't have to go too deep. There's not that much implied. We can go to the 130. Yeah, we can go to the 130. It's actually perfect right here. And you know what? If a trade looks too risky for you in terms of a stop level, don't put it on. Wait for a lower risk trade. Sorry about that. I'm just looking at the positions. All right. Where would you put your exit right here? $84, huh? Let's see. BB says 80. Technically, technically it would be somewhere right here, about 79.80. Now it wouldn't be. You could do two levels. You could do if you're aggressive, and this one there's two ways of looking at it. If it comes back into this range, which is 84, 85, or if it comes back here. So in this case, what I would do is I would do half here and I would do half here because you get two different levels here and they both look good. It just depends how risk adverse you are. I think that says what I was just saying, Gary, like 79-ish area. And then the first one, like if it moves back into this range, that would be the first heads up. Because here, if it went back into this range, I probably wouldn't want it unless it really bounced back. Okay. But yeah, technically you want to be below the 8-day MA, which would put you right below this area right here. Yeah. That's why I said I would do it probably two different times. But let me give you an option for this one. Right here. 90 strike price right there. Your best bet right there. Okay, let's move on. I don't have any shorts today. Nothing is breaking down to a 50-day line. I'll give you a few that are breaking, but nothing really, maybe only for a hedge. Marvel. Oh, I wrote Netflix twice today. Look at that. I hope this helps. If I stop doing it, remind me and I'll start again because I want you to have your levels. Again, here you have the 8-day MA. It's probably around here. I would say once we get back into the range on this one, I wouldn't want to be. Now, here's the difference between this one and the other one. The other stock was making a swing high. This stock is just it's just starting to come back to life. So I would not want to, I would not, I would not want to give this one a lot of room. If it was making a swing high, I would give it more room. So in this case, I would respect the first level if it drops down below this gap right up to the 54.80-ish level. I would probably get out of that stock. Let's look at options. Hopefully this is helpful to you guys. Good, Stephen. Good. 54 right here. 54, 55. After a while, it'll become second nature. A lot of this will become second nature to you. You will start seeing it. It'll be obvious. You have to, I'm going to tell you guys something. I was actually talking to my wife about this. You know that whole thing, 10,000 hours, you have to spend 10,000 hours to become good at something. Well, if you spend Matt, if you spend 2,000 divided by how many, 7.5, how many days is that? I'm curious what it comes out to. What is it? About 2 years?
266.
Days? 300. So there's what? How many working days are there a year?
52.
252. So a little over a year and a half. But 10, you got to spend. Oh, and remember, markets are 5 days a week. So it's going to be about 2 years. It's about 2 years to be able to see these things the way I see them. And the way most yeah, I'm going to let you guys go. I know you have the webinar. I'll let you guys go. Don't worry. I will make sure you guys don't miss T-Buzz. Isn't T-Buzz great? All right. See that? We're breaking above the 200. Again, I love these that open below and move high. But again, we got to keep these on a tight leash because unlike bullish trends, if these go down, the ship has sunk. The ocean is gone. So in this case, I would put it right here. Put it right there. Right there. 122. We're looking at calls. We're looking at 126, right? No, not 126, 127. 127 right here. 127. And I have one more for you. And if you guys want to know which one I like the best today, I like this one and IBM. Here, you would be right under the 8-day EMA. And I see here how it touches it, so you may want to give it just a little more, but I would say like right here, 169, right there, right there, 167, 169. This is a volatile beast. But I need you to understand how I'm looking at these things. So if you see me give a trade a little more room, it's because I'm looking at it from a daily, I'm picking trades from daily time periods, and I'm picking when to enter from an intraday time period, which is how professional traders trade. And they're looking at the S&P the entire day long. Like I'm looking at it right now, exactly what it's doing. Right here, 172.50. 172.50. All right. Matt, do you want to really quickly talk about seasonality and then give them that link? Now, let me give you guys a link here. Let me give you guys a link. Oh, it's a very quick one. A 30-year veteran. We all know who he is. He's going to reveal his 7 a.m. pre-market pattern that could reveal the day's strongest stock. Join him in 12 minutes. You guys all know who he is. All right, Matt, take over and talk about seasonality.
All right. Really quick then. All right. The super abbreviated version. Here's your sectors to the long side. Pull them back off. You've got energy still hanging on. And that's it because tech has a 0.7 profit factor. That's no good. We don't want that. On the short side, we have a few strong names. You've got utilities, real estate,
They
and
can't see your screen. They're seeing my screen.
oh, is it not working?
Now we're talking.
Okay. Here's the long side again. It was energy. That was it. And barely. On the short side, utilities, real estate, financials, tech sneaking in there, but really on the cusp. And then 10-day hold. We are super jumbled, just stuck in the middle again. Not much to make there. All right. Top setups on the long side. A few interesting names. You got Johnson Controls, 17 trades, 100% win rate. Hard to argue with that. OMC, John Deere, that is earnings. Be careful. CNC, we're actually long CNC. So that's nice to know. You got ICE, Waters Group, WEC. Profit factors are all good here. A few others, but I'm on the abbreviated version. The bonds to the long side. They don't seem to be cooperating today, though. All right, short side. Solar, 10 trades, 10 winners. It's the solar ETF. Currencies, that's the Canadian dollar. Got Western Digital to the short side. Activision, HPQ. Pretty broad still. Same thing over here, although maybe financials probably dominate the top on the long side. On the short side, a lot of tech, a lot of consumer discretionary. Those tend to move together. That makes a lot of sense. Then on the 10-day hold, see your strongest 10-day hold, BRSK, 10 trades, 9 winners. Not too bad. UNH, Expedia, Kimberly Clark, MasterCard, just for a few. As far as your sectors, quick jumble. Nothing super, super clear. You want to see IWM? Sure. There it is right here. Russell's a long. 10-day hold. It is a long. Look at the short long for you. Get down there. Yeah, no bueno on the short side. Let's check the long systems. Down we go. Up against balance down here. Long system doesn't work out yet, but 10-day hold does. So you should see it getting stronger in the next, 3-5 days. See you, share. I got to go too because you guys got to get ready for T-Buzz. Here is that link one more time. See you, Glenn. Have a great day. Bye, Steven. See you, Brandon. All right, folks. I'll see you tomorrow.